Hello guys, let me show you something. This will help you if you pay attention. Look at this. This is the last structure that the market confirmed, and this is supposed to be change of character. But after market came back from this inducement, you can see that we have sweep here. This is not change of character, it's external liquidity sweep. And you see market went up and then now come down. If this market wants to continue going up, it will break this structure because it has taken the major and all the liquidity below here. Now market went back, used the internal structure, then drop to confirm this change of character. The mistake most people will make is they will say break of structure here and they will expect this high to be protected. No, that's wrong. Your high is still remaining at this level because the first attempt market refused to break it. So it was the second attempt that confirmed this break. So when you draw the line here, that's when you have change of character. And what are you going to do next? You wait for the inducement, as I have been explaining, last pullback. Then if market created another one, you shift it. So the last pullback serves as your inducement. The next pullback to the last pullback serves as your 50-50 POI. It has high probability, but it's a kind of low 50-50. Then the next POI to it, which is the next other block that you can figure out, will serve as SMT. And the only one with high probability will serve as the extreme. So all you need to do, mark your inducement, mark your immediate POI above your inducement, then the any other one is a liquidity. The extreme is the high probability, while the next to the inducement is also 50-50 probability. Then the rest will be SMT. So these are how I digest this GDP USD 4 hours time frame. You can see this is our last break of structure to the upside. The market came back from inducement. First attempt, market refused to do what? To close below here. So we'll mark it as what? As external liquidity sweep. Then market push up, thinking that market wants to go and break this structure to confirm another break of structure, but market flashed down. So it confirmed this change of character here. So now, where most people get it wrong, they will say this break of structure and they will be expecting this level to hold or this level to hold. No, because of what? They don't really understand how the structure works. So look at this. This is the last pullback that the market did. This level is not a pullback because it's not valid. This is the major pullback that the market did in 4 hours. So then this is the next POI that I said is low probability 50-50. Then this is another POI that I said is SMT, and this is the extreme POI. So look at what market did. So when market got to this level, it failed this level and it reacted at the SMT, thinking you want to continue selling. Some people will use this level as an extreme, and what does market do? Market just gave them small reaction, then market coil, then boom. And as I said, market will use it to build a liquidity to extreme, definitely. If this one fail, there's high chances that the market is coming to extreme. Any POI in between will serve as a liquidity or a trap in the market. And you see exactly where market come to. Market got to the extreme, I execute the trade, and I watch what plays out. You can see market do all this drama. When it got to this level, I went to 1 hour, had another position, then boom. It took a very long time, but that's just the process. And you can see we had this trade. On this trade, when market got here, give me 1 to 3, I close partial, then hold to the full TP, and had another one here just to maximize my entry, my profits. So that's how it is. So you just have to understand the mechanical way of marking this structure. Once you understand that, your work is 80% done, because you will definitely know, at least you have the idea of where market is going overall. Then you can trade toward that direction, and you can see the way market tap the extreme. All this is SMT, building liquidity. See, and market went up, then immediately flashed down. So, and most people made a mistake on this one. They will think this head and shoulder, they will be expecting to sell, but maybe in the next video I will explain why head and shoulder fail. Head and shoulder, then compare it to the smart money concept, then why it fails sometimes and why it also hold most times. So that's it for this video.